Hi, welcome everybody. Welcome back to Alisha and Howard's Real Estate and Tax Cafe. Today we have a lot of information to share with you, and so you are aware of what's going on in the market. Hi, Howard.
Hi, how you doing, Alicia?
Good.
Good to see you again.
You too.
Let's go directly into the subject, shall we?
Okay, sure.
What are the major changes in real estate market in 2013?
Actually, there are a lot of changes. First of all, there is the interest rate, change, and the interest rate is pretty low actually. We actually have locked somebody in for 30 years fixed at 3.25%.
Wow, that's historically low.
It is, and not only that, but inflation typically is 3%, right? So if you really compare that, it's not much above the inflation.
That's true.
Yeah, and on top of that, it has been a seller's market since about a couple months back. And this is probably the first time in about 4 years in the U.S. Real estate market that it's now a seller's market.
Wow, that's a great time for a lot of investors.
Yes, it is, yeah. And because of the change, and it's actually a very rapid change. It wasn't a very gradual change. So everybody is kind of caught off guard. Yeah,
that's true.
Of the change. True. Yeah, and also for the because of the lack of inventory, there's a lot of people actually trying to get into the property.
Yes.
And so this is the best time to be investing when you're meeting both the low price of a home, on top of that, plus the interest rate is so low. And so this is a great time to invest.
No wonder. And why are so many people or buyers investing in real estate, especially from foreign countries?
Yes, there's a lot of people from foreign countries coming in, and in 2012, we actually have about 35 to 40% of all of our real estate transaction close with foreign buyers. And the reason is this, I found out from a lot of my international clients that they typically, when they purchase a property overseas, they don't really rent it out. And they explained to me that there's not very good laws to actually protect the landlord in their country. So they rather just leave it empty and wait until the real estate market pick up, and then they would go ahead and sell it for a profit. So unfortunately, a lot of times it's vacant and they're not actually generating the income. And also, this is the first time that the U.S. property is lower than, for example, Taiwan and Hong Kong, and also in China. About 15, 20 years ago, it was the vice versa, where the properties in China were about 100,000 or so for like a single family home. So a lot of investors here in the U.S. actually went there and invest, and that situation kind of changed. And on top of that, the rental market here has been outrageously very good. And so when you purchase, not only you don't have to let the property sit vacant. You can actually collect a very good residual on the monthly, and on top of that, when the property price go up, you can also leverage out on the extra equity and the prices that you are able to sell for later on. Yeah.
And when I was doing tax return, I noticed a lot of people from Beijing, their real estate is very high. The price is very high, and if they have rental, the rental income is very low.
Right.
And I really don't understand. I thought they were not telling me something that they should, but actually that is the market. That's why they're looking into this country for real estate.
Right.
And it seems like the process of selling and buying home in the real estate has been much more complicated this year. Could you tell us why?
Sure. Basically, 2007, if you can remember, it is the downfall of the U.S. market. And the reason being is actually you are able to obtain a loan because you are alive. You have a breath of air within you. That's basically all the criteria. They don't really look into your income, how many years you've been employed, and all that. And because a lot of people were able to actually get a property without actually qualifying, that kind of is the cause of the big market downfall, when people are actually buying more than what they can afford. Yeah, and because of that, the bank has, many banks has go bankrupt. Financially, they were in trouble. And some of the banks, the government, U.S. government, actually have to bail them out so they can continue to be in business. And with all these financial storm happening in 2007, the banks nowadays are going the complete opposite. They're really conservative. They want to see every single thing, just about everything besides your blood type. They want to know about. Yeah, so they're very cautious, and because of that, it's tougher to obtain a loan. So you do have to provide every single thing.
Yeah, I noticed that, and prior to that, people are getting second loan, third loan, fourth loan on the same property.
Right.
But nowadays, doesn't happen that often anymore.
Right.
Okay, and if the client is living in U.S. and would like to purchase a home to live in, and also purchase like a rental or invest in a home, what procedure or what type of things should they be aware of?
Okay, basically, comparing to again 2007 and prior. You can just write an offer, sign it without any proof of funds or any loan document, and you can actually, start negotiating. And the seller never requires that because the price of the market just keep on going up every single month. So there's no question on, the property is going to be sold. It will be sold, but it's just which buyer. Now it's a little different because of the market changes and all the things that the government had to go through. And also the bank have to go through. So they're actually making a very strict requirement on the buyers. Now the sellers are very afraid of, buyers are not qualified. So right now it's a seller's market, and they want to see, exactly, are you able to afford this property that you're offering me? And also, if you're telling me you're going to put 20% down, 30% down, do you actually have the money in the bank already? So basically, as a buyer, before you go out and see properties, you have to get financially qualified. So what we basically do is with a new client, when they come into the office, we ask them to get qualified first on the loan part before we even show them properties.
Oh, okay.
Yeah.
And for international client, I know we have a lot of people coming in this country through EB-5. I think the first thing they want to do, they want to purchase a home.
Right.
And what are some of the procedure or some of the things they should be aware of when they come here to purchase a home?
Okay, sure. One of the biggest problem that we do encounter for foreign buyers is that their money is not ready in the U.S. That's the biggest problem. And right now we're averaging every property that is in a good area, good community and good property. Many buyers are, up to, grab that property. And because of that, the sellers are making sure, that the funds are in. So for example, let's say an average property usually have 10 to 30 offers just within the first 2 weeks. And if you're competing with other buyer who has the funds in the U.S. bank and your funds is outside of the country, then you're no competition with the other buyers. Because the seller's thinking, well, are you going to have a problem transferring all those funds into the States when everybody else already have the funds here? So I get a lot of questions like that, from my clients overseas.
Okay.
They say, you know what, I don't want to transfer the money in, and I want to wait until I find a property. Well, they'll probably never find a property because other people are, in a better financial status than they are. Yeah.
And plus they don't have credit here.
Exactly.
So it's kind of cash rules for them.
Right, exactly.
Okay, good. I learned a lot. And what do you plan to bring to our audience next time at the show?
Okay, well, next time I think I'm going to talk more about the investment property, the procedures in more detail. We're getting a lot of investors from foreign countries. We also get a lot of domestic investors, for example, people who are looking to retire. And, with the 401ks and all that, they don't have much left, right? And so a lot of them are looking to have investment properties as a residual rental income. So I'll be talking more about that next time.
Oh, I'm really looking forward to that. And I know a lot of my clients are looking to that direction also.
Great. Okay. And also, Howard, this year I know that there's so many changes, with the election, the laws, and all that.
Yes.
And so if you can share with us a little bit about a few of the terms that we don't really understand.
Sure. One of the things that is the Congress approved financial cliff deal. When Obama got elected, he promised to lower taxes, but because the economy, the country really need money, the deficit is going high, and they really need to increase the taxes. And so at that time, Warren Buffett, one of the business leaders, they say, okay, I'm making so much money, but I'm paying lower tax percentage than my secretary, which doesn't make sense. And he informed Obama, you should increase the tax on the rich. And that's exactly what Obama did in New Year Eve, or January 2nd. That's when they passed it. They passed a bill in the Congress, 257 to 67, and to Senate 89 to 8, and passed a bill that anybody that are rich or have AGI above 400,000 for single, or 450,000 for a married couple, their tax rate actually increased from 35% to 39.6%.
Wow.
That's a 4.6% jump. So
that's a lot of money.
Yeah, and promised to reduce the deficit by 620 billion. So 2% of the high income in this country are actually contributing to the deficit.
I see. Now, when you say 400,000, is that gross or net or?
That's their taxable income.
Okay.
So that's how they calculate a tax on.
I see.
Yes.
Okay. And what happened to our tax rate?
Unfortunately, because the economy is so bad, our tax rate generally, everybody have a 2% increase in their tax rate because the actual rate increased.
I see. Okay. And what is AMT?
AMT is something that's so popular these days, alternative minimum tax. It's a second tax system that actually calculates tax on a different system than regular tax. We have a lot of wealthy people that have a lot of deduction, a lot of exemptions, but the AMT actually takes some of these deductions away and calculate a tax as an alternative minimum tax that they have to pay. So if they have too many deductions, then they have to worry about AMT, and they actually have a higher tax liability when they have too much deductions.
I see. Okay. And what happened to our long-term capital gains tax rate?
Long-term capital gain, a lot of people are really concerned about this because it affects everybody. Anybody that purchase stocks and anybody that sell real estate sometimes get into the long-term capital rates. In the Clinton era, it was 20%, but that was when the economy was great. But nowadays, because the economy is so slow, they changed to 15%. And they were going to raise to 20% this year. But the law passed, they only raised the percentage for the people that have income that's over 400,000.
I see. Okay.
So that actually, for those people, it will raise to 23.8%.
Wow.
Instead of 15%. So good luck, Warren Buffett. If you, he said that he's not going to trade that much stock this year. He want to purchase a lot of real estate this year because the capital gain is so high for him.
I see. Well, Warren, you know who to call, right?
That's true.
Okay, so what is a personal exemption phase out?
Everybody is entitled to a personal exemption, but if your income is so high, it actually phases out. So when your income gets to 250,000, it starts to phase out. And when it goes over or stay above 300,000, then it's completely phased out. Then you have no more personal exemption.
I see. Okay. And what about our payroll tax? Any changes there?
Yes. Our payroll tax, unfortunately, increased 2%. Last year, the economy was so bad, and a lot of people were out of job, a lot of people unemployed. So they lowered the Social Security for the individual, and lower from 6.2 to 4.2. But this year, it go back to 6.2. So this is the law that actually affect most of the people. Anybody have W-2 income, they will see a significant increase in their tax.
I see. Okay. And what about estate tax?
Estate tax actually raised from 35% last year to 40% this year.
Wow.
So it jumped 5%. So it's quite a bit when you have estate issues.
Okay. And what is the estate basic exclusion?
Estate, last year it was 5.12 million. So if for a rich person that for a person that have more than 5.12 million in their estate, and when they pass away, that part will not be taxable. Anything above that will be taxable. And last year, a lot of people thought this year will go back to 1 million instead of 5.2. So a lot of people at the end of the year, they pull the plug for these people that are sustaining their life on the machine. But the law changes drastically. It increased the 5.12 million to 5.12 million. So a lot of people, pull the plug for nothing.
Oh wow!
So that's very unfortunate. But that's another thing that tax is not very logical sometimes.
Okay, and what is bonus depreciation?
Bonus depreciation actually is something that the government want to increase the economic flow of the economy. So if the company purchase a certain equipment, you can depreciate up to 50% the first year. So that's usually you have to depreciate over 5 or 7 years.
I see.
But for this, you can depreciate part of that right away.
Oh, okay. So that's a good thing.
That's a very good thing.
Okay.
Yes.
So all of these negative, we have finally one good thing.
We have finally we have a couple more, like the energy credit actually got passed. But there's more negative than positive this year. Yes.
Okay. And what is earned income credit?
Earned income credit is for those low income family that have kids. The government actually help them out. If they are qualified, government will refund their money up to 5,000 last year, and this year we have almost I think close to 6,000.
Wow!
So that's a lot of money. But it's also audit trigger. So if you don't qualify, taxpayers that do not qualify for low income, and they report as low income, and they have so many personal expenses, it's very easy to trigger that because you're taking advantage of the system. And you're taking the refund that you're not supposed to, and the country actually needs money right now. So it's a way for people to generate audit. So we have to be aware of that.
I see. Okay. Well, that's a lot of great information. I learned a lot from the tax side of it. And so if you have any tax questions or you do need a great CPA, I'm sure you already got a lot of information from Howard CPA. So feel free to give him a call or email him. And if you have any real estate transaction questions, or you would like to actually take advantage of our market right now, please go ahead and contact me also. And we'll see you next time.
Thank you.